Enron, the Smartest Guys in the Room was a 2005 documentary in the course. And the thing I tell students about documentaries is be careful. Now, the director will have a rip from the headlines, something from the Wall Street Journal or the New York Times or the Washington Post. They'll have a scene from the CBS Evening News, the ABC News, or the PBS News. And we see the headline, we hear the news clip, and we say, wow, I mean, they're giving us really truthful information. And then the narrator, and in this case, the narrator is played by a character actor named Peter Coyote with this very deep, resonant voice. Whatever he says, we believe because we've seen these headlines, we've seen these, video clips from the evening news, and we say, oh, well, everything that's happening must be true. Not necessarily. It really comes from the directors and the screenwriters' POV, their point of view, their perspective. So you have to be cautious. Treat it with a grain of salt. Now, it's an interesting cautionary tale. How could the most innovative company in America, 6 years in a row, from 1995 to 2000, how could one of the largest companies in the United States fall from grace so quickly? Go from trading at $90+ per share to pennies on the dollar within a series of months. How could that happen? And what kind of regulatory response might we need to try to keep that from happening in the future? Now, it's an interesting movie, but there is some raw language in here, and I'm going to confess to that right now. Some of it, I think, is appropriate in a documentary, especially when they're talking about the traders. We see how kind of callous and careless they are, the lack of empathy that they have for the people in California who are experiencing rolling blackouts, and how if this means that they can charge more per kilowatt hour, and that means that there's more money in the pockets of those traders, burn, baby, burn, is what they would say. It's really kind of upsetting, but it's appropriate to have that. There is one part that I wasn't thrilled with. It's about a 2-minute clip dealing with one of the senior executives, and his name was Lou Pye. Lou Pye basically left the organization with somewhere between $250 and $280 million in his pocket. And he left early before Enron collapsed. And there's a scene right around 29 minutes into the movie, up to 30 minutes and 16 seconds, that talked about one of his proclivities. And that was he likes strippers. And I really can't do very much about it. The director thought it was important to include some scenes from a strip club. I don't particularly think it's terribly important. I think they might have done it to get an R rating. And if you want to skip from 29 minutes to 30 minutes and 16 seconds, please feel free to do that. Nothing like, from that will be on the quiz. I'd like you to learn a little bit about Lou Pye, what was happening to him before that, and then after that. I think it's important too, but that, almost minute and a half segment, not terribly important. Now, what kind of regulatory reform did we have? Basically, Sarbanes-Oxley was enacted after the collapse of Enron, after the collapse of WorldCom, after the stock market had gone from 11,000 to 7,700 in a very, very short period. It lost 40% of its value. And all those things really weren't quite enough to get a hard-charging piece of legislation through Congress. The kicker, the thing that really got this moving through Congress in 2002 was midterm elections. And we see that's happening even in 2018, how the fear of the party in power losing their power it's a pretty big motivator. Some of the things we saw that came out of Sarbanes-Oxley was protection for whistleblowers. And Sharon Watkins was one of the whistleblowers. She was one of the Time Magazine People of the Year in 2002. And actually, we had Sharon on campus in November of 2003. Did a really wonderful job. We talked to her, and I posed some questions to her. I said, well, tell me about Ken Lay. Do you think he was the evil emperor, the man behind the plan, or was he kind of the absentee landlord, this grandfatherly figure that was just kind of oblivious, focused on what kind of leather should they have in the new G4? And she thought about it for a minute, and she said, really more of the absentee landlord. The real bad guys were probably Skilling and Andy Fastow. And Fastow is kind of interesting because He was the CFO of Enron and also the general partner in something called special purpose entities, or SPEs. And you would basically move debt off the books of Enron into these FTEs with names like Raptor and Chewbacca and Death Star and all these really kind of crazy names. And in exchange for getting the debt off the books, Enron would transfer stock to these SPEs. And the SPEs were being owned by many, many, many of the major banks, Deutsche Bank, large, large banks. And Andy Fastow was basically selling this to them by saying, hey, I know that we've got a very motivated partner on the other side. I know what they're going to do. I know we're going to be treated well. I know we're going to get a great return on our investment. So one of the protections of Sarbanes-Oxley was to try to protect people like Sharon Watkins, whistleblowers like her. We also saw if the rank and file employees couldn't trade stock out of their retirement accounts because it was frozen, and that's one thing that happened at Enron at the time, then senior executives who don't have their money in retirement accounts, they can't sell their stock either. So if it's frozen for employees, it's going to be frozen for the senior executives too. Also, if a company suspends its code of ethics, like Enron did 3 times, to allow these special purpose transactions, or SPE transactions, between Enron and Andy Fastow, that you've got to make that public. So Sarbanes-Oxley was a pretty good regulatory reform in response to companies like Enron, companies like WorldCom, stock market crash, and midterm elections. I hope you enjoyed the movie. I look forward to your responses.